Welcome to our comprehensive guide on pricing strategies for global markets. In today's interconnected world, businesses face unique challenges and opportunities when setting prices across different countries. Factors like currency fluctuations, local competition, and consumer preferences all play a crucial role. In this video, we'll explore the essential strategies companies use to succeed internationally, from adapting to local markets to leveraging global brand power. Whether you're a seasoned exporter or just starting to think globally, understanding these pricing tactics can make a significant difference in your success. Let's begin by looking at why pricing is so critical in the global marketplace. Pricing isn't just about covering costs and making a profit, it's a strategic tool that can determine your brand's position in the market. In global markets, pricing decisions can influence everything from market entry to long-term growth. Companies must consider local purchasing power, economic conditions, and even cultural perceptions of value. A price that works in one country might be too high or too low in another. That's why global pricing strategies require careful research and flexibility. Next, let's explore the main approaches companies use to set prices internationally. One of the first decisions companies face is whether to standardize prices across all markets or adapt them to each country. Standardization means offering the same price everywhere, which simplifies operations and maintains a consistent brand image. However, adaptation allows businesses to tailor prices based on local conditions, competition, and consumer expectations. Both approaches have pros and cons, and the right choice often depends on the product, industry, and target market. Let's dive deeper into each strategy and see how they work in practice. Standardized pricing involves setting a uniform price for a product or service across all international markets. This approach is common for global brands that want to project a consistent image and simplify their pricing structure. It works well for products with universal appeal and little variation in demand across countries. However, standardized pricing can be risky if local market conditions differ significantly. For example, a price that's affordable in one country might be out of reach in another. Next, we'll look at when adaptation makes more sense. Adaptive pricing means adjusting your prices for each market based on local factors. This strategy is especially useful when there are big differences in consumer income, competition, or regulations. For example, a tech company might charge less for its products in developing countries to make them more accessible, while setting higher prices in wealthier markets. Adaptive pricing requires more research and management, but it can help maximize sales and market share. Let's look at the key factors that influence adapted pricing decisions. Several factors influence how companies set prices in global markets. These include local economic conditions, consumer purchasing power, exchange rates, taxes, tariffs, and the level of competition. Companies must also consider cultural attitudes toward pricing and value. For instance, in some countries, consumers expect to negotiate prices, while in others, fixed prices are the norm. Understanding these factors is essential for developing an effective global pricing strategy. Next, we'll discuss how currency fluctuations impact pricing decisions. Currency fluctuations can have a major impact on global pricing. When exchange rates change, the price of your product in local currency can rise or fall, affecting demand and profitability. Companies need to monitor exchange rates closely and may use hedging strategies to protect against sudden changes. Some businesses adjust their prices regularly to reflect currency movements, while others set prices in a stable currency like the US dollar. Managing currency risk is a key part of successful global pricing. Cost-based pricing is a common approach where companies calculate the total cost of producing and delivering a product, then add a markup to ensure profit. In global markets, this means considering not just manufacturing costs, but also shipping, tariffs, taxes, and local distribution expenses. While cost-based pricing ensures you cover your expenses, it may not always reflect what customers are willing to pay. That's why it's important to balance costs with market demand. Market-based pricing focuses on what customers in each market are willing to pay. Companies research local competitors, analyze consumer preferences, and set prices accordingly. This approach is especially useful in highly competitive markets where price sensitivity is high. By understanding local demand and competition, businesses can position their products effectively and avoid pricing themselves out of the market. Next, we'll look at value-based pricing and how it differs. Value-based pricing sets prices based on the perceived value to the customer, rather than just costs or competition. This strategy works well for innovative or premium products where customers are willing to pay more for unique features or brand reputation. In global markets, understanding what different customers value is crucial. For example, a luxury brand may charge higher prices in markets where exclusivity is highly prized. Let's see how companies implement value-based pricing worldwide. Penetration pricing is a strategy where companies set low initial prices to quickly gain market share in a new country. The goal is to attract customers, build brand awareness, and outpace competitors. Once the brand is established, prices may be gradually increased. This approach can be risky if costs aren't covered, but it's effective for entering price-sensitive markets. Next, we'll discuss skimming pricing and when it's used. Skimming pricing involves setting high initial prices for new or innovative products, targeting early adopters who are willing to pay more. Over time, prices are lowered to attract a broader customer base. This strategy is common in technology and luxury markets where exclusivity and innovation drive demand. Skimming can maximize profits early on, but it requires careful timing and market analysis. Let's move on to psychological pricing tactics. Psychological pricing uses pricing techniques that influence customer perception. For example, setting prices just below a round number, like $9.99 instead of $10, can make products seem more affordable. In global markets, psychological pricing must be adapted to local cultures and currency conventions. What works in one country may not have the same effect elsewhere. Understanding local consumer psychology is key to using this strategy effectively. Bundle pricing involves offering several products or services together at a combined price, often lower than buying each item separately. This strategy can increase sales volume and encourage customers to try new products. In global markets, bundle pricing can be tailored to local preferences and buying habits. For example, a software company might bundle products differently in each country based on popular features. Let's look at how discounts and promotions fit into global pricing. Offering discounts and promotions is a common way to boost sales and attract new customers. In global markets, the timing and type of promotion can vary widely. For example, holiday sales might be more effective in some countries than others. Companies must also consider local regulations on advertising and pricing. Effective promotions require a deep understanding of local consumer behavior and market trends. Geographical pricing means setting different prices for the same product in different locations. This can reflect differences in shipping costs, taxes, or local demand. For example, a company might charge more for products in remote areas due to higher delivery expenses. Geographical pricing helps companies remain competitive and profitable across diverse markets. Next, we'll discuss transfer pricing and its role in global business. Transfer pricing refers to the prices set for goods or services exchanged between divisions of the same company in different countries. This is especially important for multinational corporations. Transfer pricing affects taxes, profits, and regulatory compliance. Companies must follow international guidelines to avoid legal issues and ensure fair pricing. Managing transfer pricing is complex but essential for global operation. Dynamic pricing involves adjusting prices in real time based on demand, competition, and other market factors. This strategy is common in industries like airlines, hotels, and e-commerce. Technology enables companies to track market changes and update prices instantly. In global markets, dynamic pricing can help maximize revenue and respond quickly to local trends. However, it requires sophisticated systems and constant monitoring. Freemium and subscription pricing models are increasingly popular, especially in digital markets. Freemium offers basic services for free, with premium features available for a fee. Subscription models provide ongoing access for a regular payment. These strategies can help companies build a global customer base and generate steady revenue. Adapting these models to local payment preferences and regulations is key to success. Every country has its own laws and regulations regarding pricing, advertising, and competition. Companies must ensure their pricing strategies comply with local rules to avoid fines and legal issues. This includes understanding restrictions on discounts, price fixing, and deceptive advertising. Staying informed about regulatory changes is essential for operating successfully in global markets. Culture plays a significant role in how consumers perceive prices and value. In some countries, bargaining is expected, while in others, fixed prices are standard. Cultural attitudes toward luxury, discounts, and brand loyalty can all influence pricing decisions. Companies must research local customs and preferences to set prices that resonate with consumers. Next, we'll discuss how technology is changing global pricing. Advances in technology have transformed global pricing strategies. Companies now use data analytics, artificial intelligence, and online platforms to monitor markets and adjust prices quickly. E-commerce enables businesses to reach customers worldwide and test different pricing models. Technology also helps companies gather insights into consumer behavior and preferences, making pricing more precise and effective. Understanding your competition is essential for setting effective prices in global markets. Companies analyze competitors, pricing, product offerings, and marketing strategies to position themselves advantageously. This analysis helps identify opportunities for differentiation in areas where price adjustments may be needed. Regularly monitoring competitors ensures your pricing remains competitive and relevant. A brand's position in the market influences how much customers are willing to pay. Premium brands can often charge higher prices while value brands compete on affordability. In global markets, maintaining a consistent brand image while adapting to local expectations is a delicate balance. Pricing should reflect your brand's promise and the value you deliver to customers. Choice of distribution channels can affect pricing in global markets. Direct sales, online platforms, and local distributors all have different cost structures and pricing implications. Companies must consider logistics, tariffs, and local partnerships when setting prices. Efficient distribution helps keep costs down and ensures products reach customers at competitive prices. Tariffs and taxes can significantly impact the final price of a product in international markets. Companies must account for import duties, value-added taxes, and other fees when setting prices. These costs vary by country and can change frequently. Staying informed about tariff changes and planning for tax implications is essential for maintaining profitability. Partnering with local businesses can help companies navigate pricing challenges in new markets. Local partners provide insights into consumer preferences, regulations, and competitive dynamics. They can also help with distribution and marketing, making it easier to set effective prices. Building strong partnerships is a valuable strategy for global expansion. Gray markets occur when products are sold through unauthorized channels, often at lower prices. This can undermine official pricing strategies and brand reputation. Companies must monitor for gray market activity and take steps to protect their pricing structure, such as using unique packaging or serial numbers. Addressing gray market issues is important for maintaining control over global pricing. Parallel imports are genuine products imported and sold through unofficial channels, often at lower prices. This can disrupt official pricing and distribution strategies. Companies may respond by harmonizing prices across markets or taking legal action. Managing parallel imports is a complex challenge in global pricing, requiring constant vigilance and strategic planning. Price escalation refers to the increase in the final price of a product due to additional costs like shipping, tariffs, and local distribution. This can make products less competitive in some markets. Companies must find ways to manage these costs, such as optimizing logistics or sourcing locally. Effective cost management helps keep prices attractive to consumers. Price waterfall analysis is a tool used to understand how various costs and discounts affect the final price a customer pays. By breaking down each component, companies can identify areas for improvement and ensure profitability. This analysis is especially useful in complex global markets with multiple layers of costs and discounts. Price localization means adjusting prices to reflect local market conditions, currency, and consumer expectations. This can involve changing not just the price, but also the way it's presented, such as using local currency symbols or pricing formats. Effective localization helps build trust and makes products more appealing to local consumers. Coordinating prices across multiple markets is a challenge for global companies. Differences in costs, competition, and regulations can lead to price inconsistencies. Companies use global pricing teams and centralized systems to manage pricing and ensure alignment with overall strategy. Effective coordination helps prevent conflicts and supports global brand integrity. How prices are communicated can influence consumer perception and sales. Clear, transparent pricing builds trust, while hidden fees or complex pricing structures can deter customers. In global markets, companies must adapt their communication to local languages, cultures, and regulations. Effective communication supports successful pricing strategies. Global markets are constantly changing, so companies must regularly monitor and adjust their prices. This involves tracking sales data, market trends, and competitor actions. Quick adjustments help companies stay competitive and respond to new challenges. Ongoing monitoring is a key part of successful global pricing management. Let's look at how a global tech company approaches pricing. They use a mix of standardized and adapted pricing, adjusting for local taxes and consumer preferences. In emerging markets, they offer lower-priced models and flexible payment options. In developed markets, they focus on premium features and brand reputation. This balanced approach helps them succeed worldwide. Global consumer goods company uses local partnerships to understand pricing dynamics in each market. They tailor promotions and packaging to local tastes and adjust prices for currency changes. By staying close to consumers and adapting quickly, they maintain strong market positions despite global challenges. Luxury brands often use value-based and skimming pricing strategies in global markets. They emphasize exclusivity and brand heritage, charging premium prices in markets where luxury is highly valued. These brands carefully manage distribution and communication to maintain their image and pricing power worldwide. E-commerce companies use dynamic pricing and data analytics to optimize prices in real time. They test different pricing models, offer personalized discounts, and adjust for local competition. Technology enables them to respond quickly to market changes and maximize revenue across multiple countries. Many companies face challenges when setting prices globally. Common pitfalls include ignoring local market conditions, failing to adapt to currency changes, and underestimating regulatory requirements. Avoiding these mistakes requires thorough research, flexibility, and ongoing monitoring. Learning from others' experiences can help you develop more effective pricing strategies. Successful global pricing strategies are built on research, flexibility, and strong local partnerships. Companies that invest in understanding local markets, adapt quickly to changes, and coordinate pricing across regions are more likely to succeed. Regularly reviewing and updating your pricing strategy ensures you stay ahead of the competition. Looking ahead, global pricing strategies will continue to evolve with technology and changing consumer expectations. Artificial intelligence, big data, and automation will make pricing more dynamic and personalized. Companies that embrace these trends and remain agile will be well positioned for future success in global markets. Before launching or updating your global pricing strategy, review this checklist. Research local markets, analyze competitors, consider costs and regulations, adapt to cultural preferences, monitor currency and economic trends, and coordinate with local teams. Following these steps will help you build a strong foundation for global pricing success. Wrap up, we've covered a range of pricing strategies for global markets, including standardization, adaptation, cost-based, market-based, value-based, and dynamic pricing. Each strategy has its strengths and challenges, and the best approach depends on your product, market, and business goals. Remember, successful global pricing requires ongoing research, flexibility, and strong local partnerships. Thank you for joining us on this journey through global pricing strategies. By understanding the key concepts and adapting to local market conditions, your business can thrive in the international arena. Stay informed, remain flexible, and keep learning to ensure your pricing strategies remain effective as markets evolve. Wishing you success in your global ventures.